Hey everyone, how's it going? We are a couple minutes early. I'm going to wait for a few more people to come in, but I will give a quick rundown. So we are going to be talking about inflation, deflation, quantitative easing, and just kind of what that means overall for what we're seeing. Hambo and I had quite a conversation about it and kind of what we're seeing and what we think. So it's not definitive. Like, this is kind of going to be speculatory, but there is also a lot of like definitive information I'm giving you, like definitions, how it relates and what's going on with that. But we are going to start off with a fun article by Adam Schuster that he wrote about Illinois and their pension obligation bonds. I don't know if everyone has seen anything about these or not, but it was actually kind of an interesting little article. And so I do have in the YouTube, in the description, I have all the links. After the podcast, I will try to tweet out all these links so you guys can go see them if you would like. I also am going to be bringing up a bunch of stuff that Conway has graciously told me about that he wanted to mention as well. If he wants to come up, it's more than welcome. Anyone that's in here that wants to talk, you guys are more than welcome to come up and talk about this topic, because this is something we do need to start covering more, because as you guys saw in my tweet recently, like, you know, shelves are starting to get empty. Like the shortages that we're seeing and stocks and everything in these different stores. I would love if people all around the nation and around the world would start kind of posting pictures and saying if there is some kind of weird shortage throughout all the stores, or if it's just kind of like sporadic here and there. So it'd be kind of interesting to see. So we will go ahead and dive into this. Into this first article. So Adam Schuster wrote this for, let's see, when did he write this? September 10th. And he was recently on another podcast. I'm going to see if he'll come on ours and see if he'll talk about this more, just so, because obviously he would be able to be more in-depth information about what's going on. But essentially, Illinois. And if I have anyone from Illinois, I would love to hear you guys talk about this and see what you guys think. But as you guys can see in big orange outline, pension obligation bonds, or like payday loans, are a sign of mismanaged finance. Illinois not only leads the nation for using the risky debt, it owes the bulk of it. And there was something in this that really fascinated me, in the fact that let's see, politicians create the pension crisis by enhancing pension benefits far beyond what is affordable and beyond what a typical private sector worker can hope to receive. Employees who spend their career in government or work 30 years or more receive pension benefits worth $2.3 million or more, depending on the retirement system they are a part of. State workers who also receive Social Security average $1.7 million in lifetime benefits. More than half retire in their 50s. Continued on, contributions from the public employees cover only about 5% of the cost of these benefits. They're only covering 5%. Hey, everyone that's just joining. So it is amazing that they're getting away with this, because employee contributions are fixed by law. The funding gaps over time must be covered by taxpayers. And so I'll put at this point, Illinois state and local governments already spend the largest share of their revenue on pensions of all 50 states, more than double the national average. But despite its first in the nation spending, Illinois also carries the largest pension debt burden and has the biggest gap between what it currently pays and what it would take to stop the debt from growing. Similar to payday loans, the use of pension obligation bonds is often the last resort of a financially distressed entity. These politicians sell the bonds. They are betting the cash injection can be used by the pension fund to earn a higher rate of return than the interest rate which is to be paid on the bond, resulting in a net gain for the fund. This has rarely been achieved in practice. The bonds have only worsened the pension crisis in Illinois, leaving it one of the most indebted states and with one of the worst funded pensions. So, I mean, the fact that they are literally gambling taxpayer money in these bonds on the hope that they'll get a return, which isn't really likely, right? Like, you can't count on it. It's the asinine, like, and they're not even spending the money correctly, like, you know, and this is taking away from being able to, better the school systems, put money more towards education and the poverty programs and things like that. So it's a little disheartening. So I would love for anyone that is in Illinois to kind of, if you guys could talk about it, if anyone's from there, and how you feel about what's going on with your government in that sense. And so why this is interesting is that Forbes actually wrote an article about this in April. Why Illinois is in trouble. 122,258 public employees earned 100,000 plus, costing taxpayers $15.8 billion despite pandemic. So it's they're just raking in the money while their constituents are just, unemployed, not able to make any kind of money, or, they're relying on government aid and things like that. So it is kind of interesting to hear what's going on in Illinois, for sure. Growing up in Indiana, it's a neighbor to Illinois. We always heard Illinois was kind of terrible at managing money, but good Lord. So that was something that Hambone wanted me to bring up to you guys, and he had found that just a little bit ago. So that was his little tidbit for tonight. All right, so now we're gonna dive into tonight. And this is a fun little calculator. Hey Brian, what's going on? Toilet paper and water here in Texas. Yeah, it's really odd. Like, toilet paper again. Like, what is with the toilet paper crisis? Can we figure that one out? Because there should not be. Why is there a run on toilet paper? It's weird. I don't know, whatever. Because we're seeing that here in Florida too. So Florida, we haven't really seen the water shortage yet. Not too bad, at least, but toilet paper, yes. Maybe a lot of paper products, yes. We are seeing a shortage of that. And what was the other one? Like the juices, like the juice aisle. So like Welch's and like Capri Suns and High C, little box of things. That aisle was really low, and cereal aisle was really low the last time we went. So those are the kinds of things that we're noticing. I mean, maybe because we have kids, not our daughter, and that's why we notice those things. But the soup aisle, the canned soups, like those are running low. So it reminds me, and it's really interesting. This is reminding me of the time when we lived in Hawaii when the hurricanes were coming, and because there was one to the north, one to the south, and everybody ran to the stores to get supplies, which is what you're supposed to do. But it was ramen. If you've never been out there, they have an entire like aisle devoted to like Spam and ramen. It's very weird because there's all kinds of different flavors of Spam and everything, and different types of ramen from all over the different Asian cultures and stuff, like different companies and stuff. So it was very interesting to see, like, the typical things on the mainland that usually run out were still there, but Spam and ramen were gone. It was weird. So yeah, that's what we've noticed. So I'm noticing an interesting trend with that. Dealers are running out of cars and trucks as well. Really? Oh, I mean, that makes sense because of the chip shortage and whatnot. So, I mean, I guess that makes sense because, I mean, I know, we mentioned this before, Toyota and Ford had lines of trucks. Like the trucks have been created. They're sitting on lots or at the factories waiting to have chips put into them because, well, for some reason someone decided that having all these computers in our vehicles was a necessity, and so now they're waiting for chips, like all these valuable resources, all these valuable metals and that we could be using on different things are just sitting there chilling. It's cool, right? Let's see, I was hoping after MOAS to get me a new truck, hopefully next year. Yeah, probably. I wouldn't be against that. Hey Pam, they done a study in New Zealand, and they were saying a working wastewater system is one of the foundations of a modern society, so people cling to it that the foundation feels vulnerable. Yeah. Dealers are not getting deliveries, the plants are packing them into the parking lots. Yeah. So yeah, it's the auto industry is very very interesting. Hey Gio. You're in Twitter jail. Oh no, I'm sorry. All right, so this is the CPI Inflation Calculator. For everyone that is in the Twitter space, I will just kind of read this off to you. If you want to see what's going on, you might have to go into YouTube, but I'm going to be reading everything tonight that I'm going over. So it's not just going to be like, oh yeah, look at this graph. No. All right, so I have this set at $5, right? $5. From January 2000 to August of 2021, that $5 is now $8.10. Okay. If we take that same $5 and we go from last year, just last year, if I can find it. So January of 2020 to now, that $5 is now worth $5.30. So we can see the inflation on the dollar, right? The dollar is now, it takes more of this dollar to get to the $5 just last year. So that's interesting. But we can kind of see what's going on in the sense of, all the printing of money of just last year. That's a 6%. It's 6%, guys. So, all right. So now we're going to dive into this. Oh, my tabs are mixed up. So inflation. So we talk about inflation, but we're also going to be talking about deflation. And so here's the theory, and we'll see if this kind of lines up with what Hambone and I have been talking about. So we're seeing inflation, right? Like cost of things are going up, our dollar's not going as far, and we go to the store and what used to cost maybe $150 is now costing us $225, maybe $250. Depending on the thing, depending on hurricane supplies or whatever it is. It varies quite a bit, right? And so inflation. We have to understand what inflation is. Thank you, Investopedia. Inflation is the decline of purchasing power of a given currency over time, a quantitative estimate of the rate at which the decline in purchasing power occurs. Can be reflected in the increase of an average price level of a basket of selected goods and services in an economy over the period of time. The rise in the general level of prices, often expressed as a percentage, means that a unit of currency effectively buys less than it did in prior periods. Inflation can be contrasted with deflation, which occurs when the purchasing power of money increases and price declines. And so why this is important to understand what is going on. So a lot of people talk about the CPI factor, right? The CPI factor, they come out with every month or every 6 months or whatever. I've referenced it. Boss Blunts has referenced it. Anyone that talks about inflation or any economical broad macro scale thing, we reference the CPI. And the unfortunate thing with CPI is that it's unreliable, just like everything else, right? Everything we look at, everything they give us is unreliable. And why do I say that? Is that the CPI, they don't use the same factors every time for every year, on the yearly basis. They could take, 1 year they take soybeans and oil and housing costs, and they usually don't even put a housing cost in it. That's a bad example. Let's say milk and the cost to go have your car washed or something, a service, right? So then the next year they take all different factors, things that people may be using on a different scale. Then they end up taking toilet paper and oh gosh, guys, I'm running out of my thing here. Water costs, utility costs, and things. So they take different factors, and they can kind of flub up the CPI numbers to make it either look better or worse depending on what their goal is. Usually they've tried to make it look better so people don't panic, because as we know, if people start panicking, the reflection of the economy and the stock market, people start hoarding money, and it doesn't end well for anybody. Take CPI numbers with a grain of salt. Okay, that's the best thing I can tell you. But we do know that CPI numbers are going up. Based on real life situations here. So, I can't believe, they're like, oh, CPI has only gone up 1%. Oh, bullshit. I'm sorry. I'm going to call bullshit on that 100% of the time. Because, you figure if you include how used car prices are going, they were, just for shits and giggles, we don't ever want to get rid of our little Jeep. Like our Jeep has taken us from, mainland to Hawaii and back again. And we'll never get rid of it. But for shits and giggles, we wanted to see what they would pay for it, right? And it was like something stupid, like $6,000 over what we paid for the thing in 2017. It's a 2017 Jeep, and they were willing to pay $6,000 over what we paid for it. And I'm going, are you kidding me right now? That's asinine. That should not be a thing. And that reminds me of, I don't remember if it was a nationwide thing, but the cash for clunkers, does everyone remember that? Or was that just like a Indiana thing? Was it nationwide? Okay. So they did like the whole like cash for clunkers, where they gave you more money than what your car was worth so that they could actually get new cars out, like people getting to buy new cars and whatnot. It's getting to be extreme in that sense, where they're just kind of giving out money. And it's we'll stop on that subject. So anyway, so what causes inflation and who profits from it? So I'm just going to really do the key takeaways. I'm not going to read through this whole thing, because we'll be here all night if I start reading through all of these different crazy things. So key takeaways. Inflation is a measure of the rate of rising price goods and services. Inflation can occur when prices rise due to the increase of production costs, such as raw materials and wages. A surge in demand for products and services can cause inflation, as consumers are willing to pay more for a product. Some companies reap the reward of inflation if they can charge more for their products as a result of high demand for their goods. So we will scroll down here. Where was it? So like the housing market, this was a great example for this kind of inflation. We know about the housing market. Like, you'd have to be living under a rock if you haven't been paying attention to the housing market, which surprisingly, prices are starting to come back down, right? So we're starting to kind of see that bubble get a little bit thinner. But the fact that we had housing going for 30 and 40% over ask, and I really am starting to chalk this up. I don't think it was, BlackRock had a play in it. I'm not discounting that. Did BlackRock and Vanguard and all these other, Blackstone and everyone had a play in that, but Zillow is a monster. And everyone needs to start looking into them. I know we all kind of look at Zillow when we're fantasizing about our big house that we're going to buy after MOAS, but look into what they've done, the services that they provide and everything like that. They're kind of creating a monopoly. They're actually, I mean, it's killing me, because they go and they actually buy up the houses, and then, you know, they make it very hard to figure out how much they paid for the house. And then they list it and everything for whatever astronomical price tag at this point, because, you know, well, the market says that these houses are now going for 30-40% over what they did last year. And it was really interesting. I mentioned this the other night, but it was, they go in and let's say they buy these houses, they buy 30 houses for $300,000, and then they go and buy that 31st house for $340,000. And now that algorithm says, okay, now these houses are worth this because people are starting to pay more for these houses. It's just part of the factoring in, right? And so when they go to sell those first 30 houses, they can now sell those houses 40, 50, 60,000 more than what they paid for, and they're taking that profit. They are manipulating the market to where they're taking the profit, and it is ridiculous. They are also, you know, they're the people that you use mortgages for. They are their own realtors. They're their own listing agents. They're doing virtual tours. They don't have to pay out of pocket for any of this. And so they are literally just taking money and running. And it's kind of disgusting. It's very, I don't even know how that's legal yet, but they're getting away with it. So maybe we should start looking into Zillow and how that is. So who benefits from inflation? While consumers experience little benefit from inflation, investors can enjoy a boost if they hold assets in markets affected by inflation. For example, those who are invested in energy companies might see a rise in their stock price if energy prices are rising. Some companies reap the rewards of inflation if they can charge more for their products as a result of a surge in demand for their goods. If the economy is performing well and housing demand is high, home building companies can charge higher prices for selling homes. In other words, inflation can provide businesses with pricing power and increase their profit margins. If profit margins are rising, it means the price of the company that charges for those products are increasing at a faster rate than increases in production costs. Also, business owners can deliberately withhold supplies from the market, allowing prices to rise to a favorable level. However, companies can also be hurt by inflation if it's the result of a surge in production costs. Companies are at risk if they're unable to pass on the higher cost to consumers through higher prices. If foreign competition, for example, is unaffected by the production cost increases, their prices wouldn't need to rise. As a result, U.S. companies might have to eat the higher production costs, otherwise risk losing customers to foreign-based companies. So yeah, that just kind of covers, you know, who benefits from it. And so in the fact that, you know, they could be holding supplies. They could be holding supplies back and, you know, trying to negate who and how much it's actually worth, because, you know, they don't have workers. They don't have a lot of people working right now, and people don't want these jobs. So who knows? Who knows at this point? But we do know that this is happening all around the nation and around the world. And so then I found this little fun headline. I'm not going to read the article because it's bullshit. But it posted September 23rd from Yahoo News. Mainstream. Gotta love them. Americans were freaking out over inflation this spring. No, they weren't. They weren't even freaking talking about inflation in the spring, right? Like, no one was talking about that. They were still hung up on, you know, everything else going on. They aren't anymore, and it shows they believe in the Biden economy. Last time I checked, Biden's approval rating has plummeted. I'm sorry to anybody that likes Biden. I can look it up if you guys want me the stats, but his literal approval rating has dropped like 13 points or something, 13% in the last month or two. It's kind of ridiculous. I've never seen that before, actually. So then we'll get into deflation. So deflation is the general decline in prices for goods and services, typically associated with a contraction in the supply of money and credit in the economy. During deflation, the purchasing power of currency rises over time. Sorry, guys, my daughter, what she just did. Deflation in general, decline in the price of level of goods and services. Deflation is usually associated with the contraction. We already read all this. Whether the economy, price level, and money supply are deflating or inflating changes the appeal of different investment options. So deflation is actually could be really bad for the economy. I'll just read. I'll get into my theory here in a second. Deflation is when the general price levels in the country are falling, as opposed to the inflation when prices rise. Deflation can be caused by an increase of productivity, a decrease in overall demand, or a decrease in volume of credit in the economy. Most of the time, deflation is ambiguously a positive trend for the economy, but it can also, under certain conditions, occur along with the contraction in the economy. And in an economy dominated by debt-fueled asset price bubbles, i.e. us, deflation can lead to a temporary financial crisis and period of liquidation of speculative investment, known as debt deflation. So this will lead me to my thought process here, mine and Hambone's thought process here. So right now we are in the process of inflation. We know that. Everything that's kind of going on in the stock market, the cryptocurrencies, the housing bubble, all of this stuff, right? COVID, everything that has happened in the last, we'll say 20 months has been triggering this inflationary process, right? But we have this theory that we are going to start seeing deflation, okay? Deflation meaning things will start tapering down. The housing market's already coming down. Crypto's coming down. The stock market, well, it's not... getting a little shaky. We know this. And so we will see this whole idea that goods and services prices will come down, but that will cause layoffs, people losing their jobs, especially with this whole, oh, hey, let's tax the corporations. Let's, this big tax bill that they're trying to pass. Nobody is going to want to eat those profits, right? No one's going to want to into the profit margin. No company wants to do that. They're going to pass those costs down to the people, or they're going to start laying it off. So there's your inflation or your deflation, or both at this point. Who knows? So maybe it'll just kind of level itself out a little bit, but I highly doubt that. We have this thought that we will see a drastic deflation because, people aren't working. The cost of goods and services, they're already too high for what they are. Housing costs here in Tampa Bay, we actually exceeded the nation. We're one of the fastest rising in rent prices right now. It's getting a little screwy, right? And I watched this documentary that was following the homelessness in Los Angeles. I don't know if you guys have seen what's going on in LA, but LA is terrifying right now. Terrifying because they have vets sleeping on the streets in tents outside the VA because they have restrictions. They're setting up little tiny homes that, yes, I want to do tiny homes, but that would not have the same rules of what's going on over there. Like they have curfews and things like that. Like, I don't know. And then you have Venice Beach, that's a whole nother mess, right? I don't know. I'm very concerned with what's going on over in LA and the rising costs and things that's going on, the fires that, California is notorious for. And I don't understand it. So, but we do think that there's going to be this deflation, this quick deflation, which will trigger some really, for lack of a better word, incredible things to watch, because as soon as it would go down, people would be like, oh, everything is fine. We can go buy more and all this other stuff. But then it's a bubble. It's always a ripple effect. And so then we'd have, housing market, the housing bubble going under, popping, whatever. And crypto's been very shaky. I do believe crypto will go back up, but it has to drop first. Everything that goes up has to go down. The stock market, we're looking at the stock market to see what's going on and if there is going to be some kind of crash on it. So, we see all these different things, but then once that perfect storm hits where everything is down, we could see that high inflation where they start, people have panic bought and they've gone out and supply is low and everything. And so that would create a hyperinflation plus, the boom of money back into the economy, plus, apes are getting money and we're going to be buying random stuff. And it's just kind of like, I need the timeline. I need my mind map here, guys. I need this visual aid in my head on paper. And I'm probably going to work on that. But there are cycles. We do see this cycle from time to time, but I'm thinking that it's going to be a drastic cycle in the sense that, we could hit that 20% inflation rate maybe, and then drop it back down pretty hard, and then probably get close to that 40%. And this isn't anytime, this isn't like, oh, next week or anything. This could be, through 2022. It takes time for markets to actually demonstrate and show what's going on. Warden, what's going on? I'm sorry. I totally just started rambling. And how are you? Warden, are you there? We'll figure out if Warden's here or not. All right, so we will continue on this until he comes back. So yeah, I pulled up the CPI. I'm not really going to go through this because we've already kind of talked about it. But it is a link that is in the description if you guys really want to look into this. Takeaways: Consumer Price Index measures the average chance and price over time that consumers pay. Oh, sorry, totally didn't switch my screen over. Price over time that consumers pay for a basket of goods and services. It is the most widely used measure of inflation. CPI statistics over a variety of individuals with different incomes, including retirees, but does not include certain populations such as patients of mental hospitals. The CPI is composed of Consumer Price Index for urban wage earners and clerical workers, CPI-W, and Consumer Price Index for all urban consumers, CPI-U. So yeah, you just take a look at it. We're not going to fully go into this, but it is interesting. Let's see, consumer goods and services such as transportation, food, and medical care is calculated by taking price changes for each item in the predetermined basket of goods and averaging them. Changes in the CPI are used to assess price changes associated with cost of living. Okay, do I have anybody that wants to come up and talk or touch on anything that I have covered thus far? I'm sorry, YouTube chat, I have not been able to keep up with you guys. I see I have quite a few mods. Thank you guys for keeping that going. Yeah, LA's pretty bad. I'm really sad over there. It is really sad. All right, so we are going to be touching on quantitative easing. Does everybody know what quantitative easing is? We've all been talking about QE, but does everybody know what it is? I think if I can get hundreds or smiley faces or, whatever you want to give me. Thanks, guys. Okay, quantitative easing. We'll go through this. So quantitative easing is actually it's a gnarly thing that they got us into. It's not a good thing. I'll put it that way. I'll start with this. And coming off of quantitative easing is quite possibly the thing that will hurt the most if they do it incorrectly. Because it is a Band-Aid. It's a constant Band-Aid fix. And instead of doing their job, they just kind of were like, here's a Band-Aid and a lollipop, and we'll figure this out later. In the simplest terms. But so this I'll read. Okay. Quantitative easing is a form of unconventional monetary policy in which a central bank purchases longer-term securities from the open market in order to increase the money supply and encourage lending and investment. Buying these securities adds new money to the economy and also serves to lower interest rates by bidding up fixed income securities. It also expands the central bank's balance sheet. When short-term interest rates are either at or approaching zero, the normal open market operations of a central bank, which targets interest rates, are no longer effective. Instead, a central bank can target specified amounts of assets to purchase. Quantitative easing increases the money supply by purchasing assets with newly created bank reserves in order to provide banks with more liquidity. In a sense, actually, I have a very fun picture. So, quantitative easing occurs when the federal feds buy long-term securities to boost the economy. It then increases the money supply and lowers long-term interest rates, making it easier for people to borrow money from the banks. Okay, so we've seen this a few times, right, where people are able to just buy money or borrow money and borrow money and borrow money, right? Like, we actually just saw this earlier this year. I believe it was in March. We were looking at different credit cards and financial institutions and things, and I think it was Capital One, Wells Fargo, Citibank, and a couple others were actually doing unsecured credit for credit scores 580 and higher. That's that's not a good thing. That's usually it's not a known thing to do. So usually, unsecured, it's like your typical credit card. Like, you don't have to put money down or anything. They just say, here's your credit limit of 300, 3,000, 10 grand, whatever it is. Have a nice day. A secured credit card is where you do have to put some kind of monetary balance down, whether it's like $50, $100. And usually it's either the limit that you have on those cards is equal to or maybe a little bit more than what you've put down. So, like, say you have a secured card and it says you need to have $300 secured, and it's usually for a year as long as you have good on-time payments and on whatever, blah, blah, blah. But your limit would be that $300. Sometimes, like I said, it could be like $50 and you get a credit line of, 200 or something. But no, we found that they were doing like $1,000 credit cards unsecured for just people with a 580 or higher. And so we also had found, mortgages, not quite the ninjas, but bank asset backed loans. They were very kind of hard to find, but Wells Fargo was doing it. Citadel, I believe, was doing it, or something associated with Citadel was doing it. There was a few different institutions that had these subprime mortgages. So yeah, it was, we saw a lot of this easier lending earlier this year. If you knew where to look for it, if you just dig, you can find it. Okay, back to this. Quantitative easing is a form of monetary policy used, blah, blah, blah. We already did this. Quantitative easing usually involves a country's central bank purchasing longer term government bonds, as well as other types of assets such as mortgage-backed securities, MBSs. In response to the economic shutdown caused by COVID-19 pandemic, on March 15th, 2020, the U.S. Federal Reserve announced a quantitative easing plan over $700 billion. If that date rings a bell, guys, that was basically when our markets crashed last year. If you go back and look at the date, you can kind of see that's when everything just kind of dropped. Then on June 10th, 2020, after a brief tapering effort, the Fed extended its program, committing to buy at least $80 billion a month in treasuries and $40 billion in mortgage-backed securities until further notice. Yeah, bespoke tranche opportunity. Yeah, right. It's and so then we had that whole thing with Fannie Mae and Freddie Mac and that whole mess, and it's yeah, we spent a lot with this. This put our nation back. I had nothing to do with these bespoke mortgages. Citadel, Eric, you're silly. But yeah, so to understand quantitative easing, to execute quantitative easing, central banks increase the supply of money by buying government bonds and other securities. Increasing the supply of money lowers interest rates. When interest rates are lower, banks can lend with easier terms. Quantitative easing is typically implemented when interest rates are already near zero because at this point, central banks have fewer tools to influence economic growth. If quantitative easing itself loses effectiveness, a government fiscal policy may also be used to further expand the money supply. As a method, quantitative easing can be a combination of both monetary and fiscal policy. For example, if a government purchases assets that consist of long-term government bonds that are being issued in order to finance counter-cyclical deficit spending. So this next paragraph, kind of what we're going to be seeing, I would say in the next month or so. Okay. Yeah, stagflation, you cheater, you already stole it. If central banks increase the money supply, it can create inflation. The worst possible scenario for a central bank is that its quantitative easing strategy may cause inflation without the intended economic growth. An economic situation where there is inflation but no economic growth is called stagflation. And I believe that is what we're probably going to be seeing here very soon. Because our economy can't grow when there's no production and people not in jobs and things like that. Oh, okay. I finally hit it. Here's Conway. Conway's coming up. Conway, would you like to touch on this one?
Yeah, I think there's a lot of misconceptions of quantitative easing, what the Fed does, and but also the stagflation comment that you just said. I don't think stagflation is coming. I think we've already seen it, and I think we're just going to be entering into deflation real soon. Personally, I think we're seeing deflation right now. It gets a little complicated. A lot of people are probably going to think I'm crazy or stupid or I'm gaslighting them, but hear me out, right? Like, you got to go to the data for this stuff, right? Like, I'm not saying that we don't have inflation right now. Like, the CPI is very high. But if you look at the lending data, that's where money gets created, right? Like, people think that the Fed prints money. The Fed doesn't print money. They do quantitative easing. It's completely different. The commercial banking sector, when they're actually lending money, they print far more money than what people think the Fed prints. Way, way, way more. That's where you get inflation from, particularly if it's sustainable inflation, right? So like if you're borrowing money and you're creating jobs and you're getting that money flowing and people are employed, then inflation because you have a job, you can pay off your debts, and even if you don't make that much money, as long as money flows quickly, you can get your hands on the money to be able to pay back your debts. Stagflation, like you said, is when we have inflation without economic growth. And so this is where it gets a little bit tricky because yes, we've seen high prices, but you said it all yourself, right? These high prices are not because of an expansion of lending, right? We didn't have more money chasing after the same amount of goods. We had less money. I mean, that part's debatable because of the CARES Act and the stimulus checks, right? I don't know how much money actually. I think on balance, it was less money because we had a tremendous amount of unemployment. So we had less money chasing after less goods. That's where you saw your price increase from, right?
Wouldn't it be the all the stimulus? Those think back with all the stimulus, right? I know for us, we would get roughly $3,000 to $4,000 depending on the stimulus or whatever.
Yeah.
Us, we actually paid our bills and things. But I mean, I can think back to seeing people buying TVs and going out and
Yep.
buying like all these crazy things. So yeah, I see where it's debatable. You and I could probably debate this for an hour or so,
Well,
but
no,
no.
but that's why I think the inflation narrative is dangerous. Is because when people think that inflation is coming, they make the wrong decisions,
Right.
right? If you look at the data, we see that deflation is coming, and what I mean by that is like we have high prices now, yes, but we also have a record number of ships sitting at port waiting to be offloaded. right? Now, once all those goods flood the market, what do you think is going to happen?
That would be the deflation that I was literally just talking about. Like that's why I
Yeah,
said
yeah,
like
yeah.
we see it coming. Like that's where I said
Yeah,
like in
but this is like I think we're way past the stagflation part now, right? Because one, banks haven't been lending. You can see it in the bank the lending data. You can see it in commercial and industrial loans. Those are down. Particularly, they're down year over year by a lot. We're negative year over year, and you can see it in um, all credit in the commercial banking sector, right? So that's your personal loans, that your mortgage loans. You're not. A lot of people aren't getting mortgages right now. Credit card loan, opening up new credit cards, lines of credit, home equity lines of credit, like lending is just down. And when that happens, and when people get the stimulus money and they're paying off debt, like you're not creating money, you're destroying money. Like it's important to understand that we live in a debt-based Keynesian economic system. It sounds complicated. It sounds like I'm trying to sound smart, but all it really is the kind of jacked up way our economy works is that debt is money, and that's where money comes from, right? So when you're paying off debt and debt is being destroyed, that's money being destroyed. If everybody paid off all of their debt, right, where would money come from?
I mean that would
Um,
literally be coming from like it'd have to be created. Money would have to be created. No, you're absolutely right. I definitely
right,
agree with that. But
yeah. Um, so with the deflationary thing versus the inflation, the bottom line that I think should be save your money. Save your money, because we don't know what we're coming into. With the Fed has never tapered, meaning slowed down or stopped doing quantitative easing while unemployment has been this high. So when you hear people talk about taper, when the Fed even says or hints at tapering, they said they would taper in November, the thing that you should be looking at really is the unemployment numbers. And unemployment's actually been going up.
I'm so happy that you brought that up because I actually wanted to look into the unemployment numbers. And if you look at, if you want to trust what we're being told, they're going down. If you want to trust that, but I'm trying to figure
Well,
out.
yes and no.
Oh, right,
Go ahead.
trust. Yeah, no, I was so because from my understanding, from years of watching unemployment rates, they don't take into account that people that lost their benefit, the people that
Right.
aren't being tracked, right? I mean, am I wrong in that aspect of it? Because there was a shit ton of
Uh,
people that just lost their benefits.
exactly. At the beginning of September, pandemic unemployment benefits went away. So something like 7.5 million people just permanently lost about a minimum of $1,200 a month of income. So those people who were only getting that as income, their income is now effectively zero, right? And like all these numbers that we get, you really have to, and this is why it gets so confusing, is like you really have to actually dig into it to figure out where the CPI is also known as CPI because they cook those books, right?
You're
You
you're
can't
cutting it.
trust that.
You're cutting out.
Am I cutting out?
Yeah,
Dang
like you just like went really far away from your mic.
it. Oh,
There you go. Oh,
okay. You can't really trust CPI numbers. For unemployment, what you really have to look at is the amount of people collecting some form of unemployment benefit, as well as initial claims. So initial claims have been going up, and the number of people that are still collecting unemployment benefits is still really high. And even then, you can't really rely on it because there are the long-term unemployed who just stop reporting, who stop getting counted in the numbers, and we don't know how many people like that are out there,
oh, 100%, 100%.
right?
Because
So
all
yeah,
the gig workers. I mean, think about it. The gig workers, so like the Uber drivers,
yeah,
Lyft drivers, anyone that was, photographers or anything like that. They're done. Like
yep.
because I can't even imagine. Because what did we have? Like 7, was it 7 million people or something It was an
It was like
astro.
7.5.
Yeah, seven and
Yeah.
a half million people on unemployment, and I think I read that a third of them were gig workers.
Yeah.
That is an astronomical amount of people that are just cut off, and then like people's benefits just expire. People's, um, they just stop reporting. It's whatever. Um,
Yeah.
so sorry. Yeah, no, I'm right there with you. Like, so it's interesting that you think we're already in the stagflation, or we've already gone through the stagflation. So, and I wonder maybe if it's different parts of the country. Maybe because like, if
It could. Yeah, it could.
I'm
Yeah.
okay, we're gonna have to start pulling this. We have to have at least we have to have at least one person throughout the whole ape community, that lives in one state, right? We have to have Alaska, Hawaii, Maine. I want 50 states. I want everyone to kind of figure out what's going on. Um,
Yeah. Even then the stagflation argument is debatable because like normally for stagflation you want to see lending growth, so there's a lot of money going around, but you don't actually see economic growth. That's where the stagnation part comes from, right? I mean, I think a lot of people are sick of hearing this, but like coronavirus, the quarantine, the pandemic, like it really did do a number on the world's economy. And the reason I bring that up is because like we had all of these pandemic programs that screwed everything up, and it makes finding the truth kind of hard, right? So like mortgage forbearance, which by the way ends this week, if I'm not mistaken. Um, what did people do with all the money that, like, first of all, the criteria was kind of insane, but understandable, I guess, maybe. Like, all you had to do was claim that you were affected by the coronavirus, economically speaking, and they let you claim mortgage forbearance, which meant that you could just apply for this, stop paying your mortgage, and at the end of the program, you had to pay all that back. Well, that's coming up soon. So where are people going to get all this money? And do they still have that money? That's the question. I think some people made off like bandits.
you're
Am
asking
I
the
cutting out
same.
again?
No. You're
Oh,
you're asking the same damn question I've been asking. Because I mean, unless there was some people that actually paid attention, where they could get the amount that they owed pushed to the back of their mortgage. Um,
yeah.
and this applied to cards as well. You could do it with your automobile. Some institutions were letting you, not pay on your car, and it was pushing it to the back. Lucrative. You can request, and I'll bring you up if you want to talk. Um, but I don't think a lot of people did that. And you're right. Like, we're looking at what, 20 months or something crazy of people not
Yeah.
paying an average of 2 to 2,500 a month. That's a lot of money. Like, I don't have that just sitting in my bank account. Um,
Yeah. So the question is, where did they put that money? Is it sitting in their bank account? Maybe. That's probably why we see like such staggeringly high overnight reverse repo numbers, right? Did they put it into the stock market? Also, maybe. Maybe that's why we're seeing, all-time highs beyond all-time highs. Did they put it into cryptocurrency? Also, maybe, maybe that's why we see uh, such a bull run in the currency market, which is coming down now. Um, and then there's leverage. I mean, mortgage forbearance and investing that money instead of just holding on to it. That's a form of leverage as well, but there's leverage everywhere, you know? You see the charts of how much leverage there is in the system. It's a lot. It's a scary amount. So what happens when margin comes calling? And hopefully it doesn't all come calling at once, but
I
I
think
think
it
when
is.
mortgage forbearance is due, it will be. Yeah, exactly.
Yeah.
Hey, what's up, guys?
Hey,
What's up?
lucratively, what's going on? What do
Hey,
you got for us?
not much. Just didn't want to interrupt too much, but you kind of covered it, kind of. But one of the things that I wanted to bring up was, according to NAR, I believe most homes in the United States at this point have a 25% equity, over 25% equity on their homes. Um, One of the things that I noticed last year, late last year, early this year, there's a company called Mr. Cooper. They're a mortgage company, and what they started doing was forcing refinances on their clients. And I'm wondering if that has anything to do with what's going on, because if you think about it, um, a lot of how these companies make money make money is through loan origination, and when you refinance, you're closing one loan and opening a new one and their interest rates get lower as well, right? So just wanted to throw that out there, see if that had any relevance to what was going on, and kind of give that real estate side perspective as well.
It's actually really good knowledge to know if anybody needs to go refinance before all this shit hits the fan.
I think rates are coming down even more. I think we're going to see close to 0% interest rate on mortgage.
You broke out at the end there.
Oh, I said I think we're going to see very close to 0% interest rates on mortgages.
It would be wild, man. I know that we were at our interbank mortgage rate, or I'm sorry, interbank interest rates were at 0%, and the industry thought that it was going to happen to the mortgage industry. But the rates are a little different because they have annual interest rates, and then they have the interest rates from the Fed don't necessarily convert into mortgage interest rates, right? They base it off of it, but it's not it's not an exact it doesn't necessarily move with it or against it in any fashion. It's just based off of it. But I don't know. One of the things that I do know is that according to the National Association of Realtors, we just hit over the 2008 um, recovery point. So wherever we had dipped from 2008, we've officially left that dip and are past the recovery point on it. So one of the things that I've been thinking of is, well, for an investor, it's a really good opportunity and a really good time to buy because either house prices are about to boom or rent is going to boom if the market crashes again or if it goes down again. Um, and we just don't have enough inventory because and I have to just kind of quick disclosure, I am a licensed real estate agent in the state of Florida. This is not real estate advice unless we sign a contract or anything like that, and I'm not in the business much anymore anyway. So but uh, what I was wondering is because these investors are paying cash 30% over ask price. I mean, and that's already above 30%, or I'm sorry, that's already 30% on top of the 30% that we've seen since 2020, right? Um, and they're doing this nationwide, right? The process is called iBuyers, right? That's what they call themselves. And basically what they do is they go buy homes cash, no contingencies, as closed as quickly as possible, right? And then they either flip the house because it's going up so quickly, or or they use it to hold and they add it to their portfolio. In many cases, if you guys read Robert Kiyosaki, he has a book. I believe the book is called "Where's My Money" or "Who Took My Money," and he talks about how a really good investment strategy during an economic downturn is to hold real estate because as the government tries to find places for people who have no homes to live, they start offering government subsidized assistance to landlords, basically section 8, right? And it's kind of like holding a bond. Now it's a guaranteed rate of return during an economic downturn, and then by the time whatever downturn is over, the prices are going to go up. They'll be able to flip those homes later on too. So it's a really good opportunity to invest in real estate right now because of that kind of that crusp or fulcrum point, where it's going to either make it or break it. I think we're getting really close to that.
I am going to have to respectfully disagree. I think people in the real estate industry, their sentiment is high, and we see that from the data, from the polling data. But from the buyer's perspective, consumer sentiment is it's low and heading much, much lower. And when you get that sort of divergence, that becomes a problem, right?
Is that
Where
is
people
that buyer sentiment or seller sentiment?
buyer sentiment.
Right.
It's just consumers in general. Consumer
Yeah.
sentiment is just down across the board, meaning that they don't want to spend money. They're unsure about the future. They'd rather save money. Because everything seems too expensive right now. The stock market seems too expensive. Cryptocurrency seems too expensive. Real estate seems too expensive. The cost of goods and services seems too expensive. And this is where we get back into that deflation discussion, because when you get a divergence like that, when prices are too high, buyers reject those prices by not spending their money. And then what do you do as somebody that's trying to sell something? You have to lower your prices until you find somebody that'll buy your stuff, right? It's the same thing with loans, right? If the interest rates right now, while they're low, at all-time lows, pretty much, and you're still not getting people coming to borrow money, what does that mean for interest rates? That means they have to go down even more. That's why I say that we might actually see 0% mortgages, or not, maybe not exactly zero. Okay, probably not exactly zero, but close to it, right? Like what's the average rate of a mortgage right now? 30-year fixed.
I think it's around between 2.5 and 3.2, I believe, 3.25.
Okay. And from the lending data that we see from the Federal Reserve, lending's not going up; it's going down. And so what that means is that these rates are still too high, and people still aren't feeling confident. And that's why I go back to the coronavirus. Like, it really messed a lot of things up.
It did. One of the things that, well, see, at least as far as the real estate industry, this is something very important to take into consideration, is
Yeah.
the fact that the moment, so March 2020, within a month, we went from a 3-month absorption rate to a 15-day absorption rate. So absorption rate is basically how many, if they stopped listing homes, how many houses do we have to sell? How long would it take to sell the current inventory of homes that we have? So it went from taking 3 months to sell every home that we had in the market to taking 15 days. And I believe it's a little higher now because the market is starting to shift. But the what people don't consider, though, is that a lot of the sellers who had their houses up for sale took them down because of the coronavirus. So this lack of inventory is almost virtual. It's almost it's not a real lack of inventory. It's just people are afraid to open their homes up to the virus, right? But the moment that they feel confident that the virus is no longer an issue, and then when they realize that their homes that they didn't sell in 2020 have appreciated 30% in the last year, I believe that there's going to be a big like sell, and then it'll kind of taper off a little bit and level itself. There'll be a lot more inventory. Buyers will be happy because the problem now isn't necessarily that prices are too expensive. It's that the houses that are available are too crummy for the price that they want to sell them at. A lot of the best homes have already been sold. Usually, the best homes are sold without even hitting the market. So, uh, like we've kind of taken off all the cream of the crop type homes, and now we're kind of left with the stuff that people are trying to just get rid of, like
Yeah.
80s decor. So the inventory thing is the only aspect of it that I'm having a hard time with, because like I said, if we do boom, and there is a boom, and then coronavirus is not a threat and sellers come back and put their houses up on the market, it could level everything off.
Yeah. I mean, this is going to be a very interesting week and a couple months coming up, because if mortgage forbearance ends and we find that a lot of people are out there and they're not able to pay their mortgages, as the data currently shows, because we're at record high mortgage delinquencies, and like extraordinarily higher, extremely delinquent mortgages, meaning they're 90 days without payment. If those people can't make those payments, and they start getting evicted, and then eviction moratorium also lifts at the end of this week actually. If those people start getting evicted and houses start getting foreclosed on, and then you see a flood of real estate enter the market, are prices going to go up? No, they're going to go down. And then all those people sitting on homes not selling, right? What if they start panic selling, thinking, oh crap, I missed the top of the market. If I don't sell now, I'm going to lose all my equity. Not all, but you know what I'm saying. So these are some real questions that need to be answered. And
Absolutely.
I think real estate coming in for a serious correction, personally.
Yeah, economy
That
up.
being said, yeah, low
Uh,
rates may prop it up, but we'll see.
yeah, I know I'm right there with you. Like, you know, we've been tracking the real estate. You know, my husband is a real estate agent here in Florida too. But no, he doesn't practice either now because he's like, I see what's happening and I can't lock people into this bullshit. He's like, I just can't.
Same reason I left too.
Yeah, I figured that you guys are pretty similar. So no, I mean the moral compass thing, like, you know, we shoot real estate. Like we're still in the industry a little bit, but you know, we just go and take pictures. That's literally like we get to go do the cool houses.
Yeah.
So I mean, but it is very interesting because that nationwide. I mean, Florida, God, our markets got freaking pummeled because everybody was moving here. And it was ridiculous. Like we'd see a house and it'd be gone the next day. And it was, but nationwide, you'd have like a 2 month supply, you know, average. And that is insane. That is insane, guys. That shouldn't happen. You want 9, 12 months at least of inventory for houses, not this craziness that we saw. Um, and so it's a no, I don't know what they're going to do mortgage wise, but I do know, or like with the interest rates, like I don't know if lowering the interest rates again like they did last year would be good in one case, because we could see just another boom like we saw and it would just create some kind of buying frenzy again. um, but
I think, yeah, I think it's possible that the price for homes comes down, but the rate for mortgages also goes lower. So you get this weird dynamic, which isn't usually the way the real estate market works, right? Usually, when the price of a mortgage, the interest rate on a mortgage, goes down 1%, you see what, like a 10 to 11% increase in the sticker price of a house, something like that, right? But again, I don't think the Fed is going to taper. If you agree with that part, which I know many people don't, just think about this, right? If they continue to do quantitative easing until they see unemployment back to normal pre-pandemic levels, what does that do for the bond market, which is where a lot of this stuff is based off of, right? Because they're buying more bonds, it pushes yields down. And when yields go down, it affects everything else too, including mortgages. So that means mortgages have to go down. And then they will go down until people feel comfortable taking out those loans, right? Because what is a 0% mortgage? It's, in a way, it's like free money, right? Quote unquote free money, right? Meaning that as long as you're able to meet the payment, you're good, because you're not quote unquote losing money over time because you have some interest rate to pay off of, right? So that's a distinct possibility in our future. I don't know. I noticed JB's had his hand up for a really
yep,
long
I
time.
was just gonna call on him. JV, what's going on?
Um, so for the mortgage rate stuff, the Fed rate for like banks to loan to other banks that they use to do the mortgages has been zero or almost
Yeah.
zero for a while. So, I mean, for the banks to do a mortgage for much less than the like 2%, 2.5%, like for them to do much less than that, F, which, inflation is going up. So it's hard to say that they're going to want to loan out money for less than inflation, because that's actually a losing trade for them.
Right, but the question here where a lot of people get tripped up is the inflation that we've been seeing sustainable? The answer is no, right?
Well,
Because we have record high unemployment, we have, consumer sentiment down, We don't have job growth right now. What we see is people are actually increasingly applying for unemployment, and the jobs numbers are fake.
But
They're
isn't
cooked,
historical inflation like 2 to 3%? So even if it's not this high rate that's 5 or assumedly more right now.
Right, but it has to be accompanied with economic growth, with lending growth, with sustainable economic and lending growth, right? Otherwise, things fall apart. Like, I mean, that makes sense, right? If you can't afford something, if you buy it, you don't buy it because you physically cannot buy it, right?
Well, I mean, if you put it in the perspective of the hedge funds right now, right? We can,
Sure.
if you want to do it that way, they have been borrowing shares, and they have no money to cover those shares. So it's not sustainable. This price suppression on our stocks is not sustainable, given the fact that they will run out of money trying to borrow and borrow and borrow. If we want to look at it that way, is that kind of making it make sense a little bit? I might have just confused everybody again. But yeah, no.
Well, the difference is that you can't cook the books on your own mortgage, right? The bank know exactly what you have,
Right.
what you cook, what you owe. Hedge funds can mark their shorts as longs, and I don't think this is a great comparison, but it does make sense. Yeah, like
I was trying here. Quick thought. Hallister, what do you got for me?
Well, no, I was just going to try to reply to the last thing where we had a little bit of a pause there. I don't know. I mean, I think that's what everybody's worried about is that sustainable? I mean, I agree that like unemployment has turned. I mean, I think the numbers this past month missed, and you know, like you said, we've got this the mortgage moratorium expiring soon. Inflation's at a unsustainable high rate. Like it is interesting because one of the things, Conway, like you touched on earlier, was basically just like the basics of economics, right? Like if the prices get too high, people are going to stop buying. I mean, that's one of those things I don't think we've seen like in a long time. Like it's one of the basic tenets of capitalism is like if the prices get too high, people are going to stop buying things rather, and that just hasn't happened. With those things you've been talking about, like the loan increasing, the unemployment increasing, like what happens then?
Yeah, and that's why I think the inflation, like everybody's been worried this entire time about inflation without getting a grasp on the bigger picture, which is why I think constantly talking about inflation without also talking about deflation that's coming potentially is dangerous. Like think about all the people that bought houses at all-time highs. Think about all the people that bought stocks at all-time highs and are now in the red, right? Or crypto, same thing, right? Like if we actually saw sustainable inflation, people would be buying houses, and the real estate market would not be turning down. Like it depends on what region you're from, what area you're from. I don't know what the market in the real estate world is looking like in all areas of the United States, but in general, there's a huge divergence there where prices are too high, consumer sentiment is low, people aren't spending money, and even though we have some of the lowest rates on mortgages that we've ever seen, people still aren't going out to borrow money. That part gets a little bit more complicated too, because banks have gotten really strict about their lending standards, right? And it has to do with quantitative easing. When the Federal Reserve does quantitative easing, yes, it does expand the money supply. If you look at the money supply, it just goes straight up like a rocket, and people think that's inflation. That's not inflation. That's what you get when you do quantitative easing. And what happens then is, because of the way things work, big banks, right? Like all the big banks, they fall under the GSIB category, which is like, man, what does it stand for? it's like a systemically important bank. That's where the too big to fail comes from. And what happens is that if your GSIB score gets too high, you get a penalty, and you have to pay that penalty. Systemically important financial institution. What does GSIB stand for? Globally systematically important banks. That's what it stands for. Sorry. When your GSIB score gets too high, you pay a penalty. And the GSIB score is based on your balance sheet. So when they do quantitative easing, everybody's balance sheet increases. That's where you see the money supply expanding from. And while technically speaking, lending is a source of income for a bank, lending also increases their balance sheet. So unfortunately, as an unintentional side effect of quantitative easing, what happens is that banks just stop lending money. They just stop giving out loans. Or they severely slow them down. And that's what we've been seeing for the past year and a half.
Yeah, I mean, there's been a lot of things recently. Like, I mean, I know Wells and Bank of America have definitely decreased their lending. Of course, interestingly enough, I'm watching soccer this weekend, and I see some ad for Goldman Sachs with their little, it's like Marcus or something it's called, like a, personal loan thing from them or whatever. I don't know. I mean, I find it interesting because, even like cash deposits, like for a bank, those are liabilities on their balance sheet, and loans are like technically assets.
Yep.
Which is, I don't know, even as an accountant, that confuses me.
That's just how debt-based Keynesian economics, unfortunately. Like, for us normal people, it seems like a wild, backwards, upside-down concept. But for the finance industry, for economists, and for the banking sector, it's totally normal.
Yeah, it's crazy. I mean, we've been in this dovish environment for so long, and and even Jerome Powell, like in the past couple of weeks, I mean, he basically said, yeah, we're gonna start letting off the QE, but not until we reach full employment.
Yeah, well, yeah, that's it. That's the important part that everybody seems to skip over for some reason.
Right.
I don't really know why.
How you skip over that.
Yeah, I mean, he starts off the speech with that, right? And you look at the unemployment numbers, and they're still high. They're still like 1.5, close to 2 times higher than we were pre-pandemic, and we have to, close that gap before the Fed is even allowed, basically, to stop quantitative easing. Right? They have a congressional dual mandate, and the dual mandate is, one, control prices, which frankly they can't do. Right? If the prices are high, it depends on why the prices are high. If it's because of sustainable lending, then they can raise rates and then pull back some of that money. But in this situation, they can't control the inflation, and that's another reason why people are so upset at CPI and the government and the Fed and everything like that, is because if you really looked at the numbers, they're much, much higher. I think Michael Burry tweeted something out a couple days ago about just how far off the inflation numbers really are. He deletes things, so go to Burry Archive on Twitter, and you'll see an archive tweet of him saying that. The second congressional dual mandate is to ensure maximum employment. And so that's the part that you should be focusing on when it comes to quantitative easing and when the Fed will taper.
Well, yeah, and I mean, and that's why, like, I agree with pretty much everything you've said. I mean, I always enjoy when you come on here because you definitely are very well studied, like when it comes to macroeconomic issues. But I mean, that's where I just worry so much about like the deflationary part, because I agree with you that it would make sense that would happen given the lending environment, given consumer sentiment, and everything else. But I'm just afraid that it's not. I'm afraid that inflation is going to continue taking off, and there's so many people that are just going to be left in the dust as this stuff runs away from them. Because of these macroeconomic policies that are not tailored to the normal person.
Yeah, and again, that's part of why inflation is dangerous, but deflation is actually worse. I'll get to the deflation part later, but like, I mean, what do people do when they expect inflation to be coming? They make the wrong decisions in this case because, some people may be buying gold and silver, and that's been in a bear market. If you bought it at all-time highs, that sucks. Same thing with all the other things, the stocks and the crypto and the real estate and all that other stuff, right? You make the wrong decisions. But also, like, what do we see in the job market? We keep talking about a labor shortage, but do we really have a labor shortage? I mean, yes and no, right? It's more so that prices are too high. People don't want to work for low wages because everything keeps going higher, and so they reject jobs that pay low wages. And then so we have businesses that have to, go bankrupt. They have to close their doors because they can't find anybody to work, and that pushes prices even higher in some cases, right?
Oh yeah, 100%. And I feel like this might be the first time that we're actually seeing it, like, in a really long time. I mean,
Yeah.
I where I am, I mean, I'm seeing that all over the place. Like, people are like just in a
You cut out.
Can you hear me or no?
Yeah, we
Yeah,
can hear
yeah.
you.
Okay. Well, yeah, like, just where I live, I mean, I've seen houses for selling, way above ask, but at the same time, like you said, you have these low wage jobs that people are just absolutely rejecting. I mean, everywhere around, like, it's hard to, go to a restaurant and get decent service because, nobody wants those jobs. And it seems like it's coming to a head, like, in a way that I've never seen in my life.
Well, it's
Yeah.
actually really funny that you said the house because I think you've heard my story, right, about Burger King. Like, you've heard that story. Yeah. Like, I mean, I actually can't tell you the last time we went out to eat because I just don't want the disappointment anymore. Like, I mean, and it's funny because I do love to cook. I love to cook. But, when you don't have time, when, you're doing 1,000 things, like, the last thing you want to do is cook, right? My husband and my mother have been a godsend lately. They've been doing a lot of the cooking while I've been running around like a chicken with my head cut off. But no, it's 100%. Like, I mean, we go to the, like, grocery store. We go anywhere where it's service ran, and it's terrible. And Johnny Rocket, I do want to thank you so much for the $10 super sticker. I love the Superman pear thing. I think it's a pear. Yeah, it's a super pear. I love it. Thank you. But no, I have no idea what to do with this because I also had an article pulled up talking about the vaccine mandates. So here in Florida, it's a little bit funny. Lou can attest to, like, we live life a really funny way down here.
Florida's wild.
It is wild, but I wouldn't trade it for anything, especially in the Tampa Bay area. Like, it's just chill, and for the most part, people mind their own business. It's a great place to live. But at the same time, I'm looking. I watch the whole nation, right? My sister lives out in California. We have friends in Colorado. Obviously, first strikes out in Colorado. I have family in the Midwest, all over, and it is, you guys think we're wild. The things that they are doing is insane. Like, actually, this is a funny thing. Tim the Tatman. Does anybody know who that is? The Twitch person who just went to YouTube. Does anybody know who I'm talking about? No? Okay, so that just totally showed my nerdism. So he was from New York. Yes. He's a funny person. You guys need to go watch him. He's hilarious. Great gamer too. Moved from New York to the Panhandle, God help him. I think the Pensacola area. And he's been coming down to Tampa, and he was actually talking about the drastic difference. I mean, I'm talking culture shock at this point, going from New York to Florida. That's insane. Because you go from really high restrictions and, having to have a COVID passport and all this other stuff to Florida that, will shun you for most things down here because that's just Florida. And he was talking about how how weird it was for him to, go out in public and see people and all this other stuff. So I think this is where we need to really take a step back and see how the service industry as a nation is being affected too. Like people that are uprooting themselves, because that's what I was going on with this. The COVID mandate, these hospitals and stuff, they're actually losing like hundreds, 200, 300 of personnel out of their staff because people don't want to get the vaccine or for whatever reason, religious purposes or whatever it is. And they're relocating to places like Texas and Florida. And so I'm wondering how that is going to start changing the service industry, right? Because if you go from like the Midwest and you come here, Lou, what's the biggest thing down here in Florida? What's the biggest industry?
Sugar, oranges.
The restaurants.
Tourism.
The tourism. Yeah. I mean,
Okay.
Yeah. That's where I was going with it. The tourism, right? The beachfront restaurants. And funny enough, like I saw, we were down in Clearwater Beach. There's like 5 restaurants that I always kind of like look at and everything whenever we're walking around. And one of them had a help wanted sign. And I kid you not, it was gone within like a week. There are so many people. There are a lot of places around here. And granted, there is another one that's had a help wanted sign, I think, up for like 2 months. I don't know if that just says something about the business. I don't know. But it's just really interesting that these little, like these restaurant jobs here on the beach, they're actually getting people to come in. And this is our off season. Like people, like the snowbirds are getting ready to start coming down here soon. So, I don't know. Like I'm really, I'm curious to see how those kinds of numbers will be affecting what happens around the country, right? Because like, places like Florida and Texas, and I think, Montana is like us? Is it Montana that has? Yeah, Montana, random state. No offense to anybody that's from Montana. But those 3 states, I'm wondering how those 3 states fare versus the rest of, like New York or California, or Oregon, places with stricter regulations and things. Anyone have thoughts on that? Like anybody that lives there, maybe?
I live in the New Jersey, New York area, and I'm not in New York as often, so I can't really speak for that. But here in Jersey, there's some places that just are still just straight up shutting down because they can't find people to work. Like I knew this place that was open 7 days a week. Now they're only open on weekends, and they can't find people to work in the restaurant if it's not a weekend.
That is insane. Wait, Johnny Rocket, don't you guys see people's faces off in Florida? What? I don't know what you're trying to ask, but we don't do anything to people's faces in Florida.
That old bath salt.
Oh no.
Oh my god, that's so old.
Oh, booger sugar in Florida. Yeah, that's there's some craziness that goes on around here.
Bath salts.
Yeah,
Florida's wild.
Florida. It takes a very, Lou, you can agree to this. It takes a certain kind of person to live where everything wants to kill you.
I think it's because of the disclosure laws. Come on, that stuff happens
Yes.
everywhere.
Oh,
But
yeah.
the Florida man thing is because
Yes.
of laws in the state of Florida that allow those kind
Hey.
of things to be public.
Why are you giving our secrets away, Alistair?
Oh, come on. Well, no. So I don't live there, but I travel there plenty, and gosh, you said snowbirds, and it gave me flashbacks. I'm like, oh god, it's coming.
Oh,
Yeah.
yes.
Oh, yo. What's up, y'all?
Hey, Twisted, what's going on?
Cool and lucrative, man. What's good?
Yo, what's up, brother? How you doing?
Man, I ain't seen you in forever, man. Where you been hiding at, bro?
It feels like I've been doing a lot of work this weekend, getting stuff ready for October 15th.
Facts. So you thinking that's the date, bro? That's the date?
Oh no, I have personal project that I can't talk about until after the 15th, but I'm getting ready for it.
Okay.
So that's why I haven't been on too much.
Ed Bob was good, bro. Yeah, man. I kind of been in and out, man. I've been popping in and out. I took a couple of weeks myself, bro. Yes, I feel you, man. I ain't know if you had got mad or like you just like fuck Spaces or what, bro. I ain't
Oh
seen you
no,
out.
I love Spaces. I just I haven't been on very much in general over the weekend.
Oh, okay. So what we talking about, man?
We're actually going to wrap it up here soon. Apparently, we're talking about bath salts, which is a very old news article from Florida. God damn it, guys. No, and yes, Hallister is right. Our media here in Florida has like free access to all crazy shit that happens. So yeah, that's why Florida Man exists. But the reason I say why it does take a special person to live in Florida, because you have fire ants, alligators, bears, cougars, stingrays, sharks, pythons. I mean, you name it, everything kind of wants to kill you here. So
So y'all are eating all of that shit in Florida?
actually, I do believe some restaurants serve almost all of that. But no, it's just a funny. It was just a funny thing that we were talking about. So yeah, it takes.
I came in too late. I'm sorry.
No.
What part of Florida you in?
Tampa Bay.
Tampa. Okay.
Oh, it's
So
home.
you're in a nice part.
It's home. You can't beat Tampa Bay. It's just quiet and low key.
Sounds right.
Yeah. But yeah, so does anybody have any final thoughts? Conway, I know we didn't get to talk a lot about deflation. Did you want to touch base on that real quick before we head out? Because that is a very important piece to this whole puzzle tonight, right?
So yeah, deflation, I do think it's coming. I think we're seeing it already. You can see it in what I was saying before about how prices are at all-time highs, but consumer sentiment is really low. Who was it? Finance Lancelot on Twitter. He tweeted out a few days ago some charts that he says it looks like deflation, and frankly, I agree with him. The thing to understand about deflation and why it really is worse than inflation is that we can enter into a deflationary spiral. And what that means is that when you start to see prices come down and you're still not wanting to spend money, and you're kind of thinking, maybe if I wait longer, prices will come down even more, that can be this sort of feedback loop that means that you're still not spending money because you're still waiting to see if prices come down. Sellers are dropping their prices lower and lower and lower, desperate to try to get somebody to buy this stuff. And I think that's what we're going to see happening really soon with real estate, with goods and services, with a lot of industries. And the crappy part about that is that if store owners have been buying up all this inventory at all-time highs and they can't move that inventory, especially if it's perishable, they have to get rid of it somehow, right? So maybe they lower their prices and they take a loss on it. But if
They go out of
nobody's buying,
business.
they go out of business. Exactly.
We see a lot of businesses failing and falling. Yeah.
Yeah. So we could be losing both ways. Like, because who wins in a situation like what we're seeing right now, where people don't want to work for low wages? Well, the small businesses, the mom and pops, they all close up. They go away, right? And then the Amazons win, the McDonald's wins, the Burger Kings win. The big corporations that can afford to take a temporary hit because they're going to gain more business into the future, right? Those kinds of businesses win, and that's not an ideal future, in my opinion.
Okay. So we got to look at both sides, right?
Yep.
It's a double-edged sword. So
Yep.
we find ourselves kind of transitioning into a different future, right? Where it's not per se nothing's really like hand to hand or walk in a store, because I mean, you got to understand how viruses work, right? This doesn't just go away, right? It just kind of like continues to mutate over time. I'm sure that a lot of us will become more resilient to what's going on with all of that nonsense. But in the same sense too, right? When everybody's just ordering shit online and it's just getting dropped off by a drone in front of your door, right? When you're not going to dealerships anymore because they don't exist, but cars are just driving themselves to your front door. You know what I mean? I get what you're saying, but I think so when we're looking at that deflationary situation, right? We're looking at the market crash, we're looking at everything falling, we're looking at the housing market falling, and we're saying, yo, shit is getting fucked up. But the reality is, shit is resetting itself and making way for a different future. And I think that a lot of it will be fucked up for a while. So when we watch the housing market fall, we will watch it rapidly go back up, just on the principle that there'll be less available, right? Hence BlackRock buying up all of the properties. And shit like that, right? And the incentive for more FHA loans and things of that nature, right? So it's a principle of knowing what's coming and doing something about it to secure your future. I think like that's the biggest thing. That's the argument. We can't essentially worry about the game that's being played between the U.S. and China and how fucked up the world is, or how fucked up the situation is gonna be that's coming. I think the better part is focusing on investing in inverse ETFs or buying properties like lucrative. You actually selling your property, right? But by buying properties and buying land and kind of securing yourself so that you have tangible assets versus just assets and one given security in the stock market, right? But kind of like spreading it around and owning more physical, right? I don't think it's gonna be a bad situation. I think like I say, we're just recycling, or like we're resetting, we're restarting, and I think that what comes in the next 10 years is gonna be ultimately way better than what we had in the past. Not just from not just because things are gonna come back, even though a lot of small businesses may fail or fall off and pay may. I'm trying to just find the best words to put this because I don't want to be taken out of context. In terms of people getting paid less, I think over time, right, the United States won't be so over leveraged. We won't be in a bubble anymore, right? So we get to start from the bottom and we get to see things grow, and we enter a age where we can prosper a lot more, just in a different way.
Yeah, Twisted, I think you got it. In my opinion, you hit it. Like, I mean, we talk about the fourth turn. Fourth turn has about 7 more years. So yeah, and then within the next decade, I think we will see a turn for the better. Pam the Trader.
No, this is coming soon.
Pam the Trader, thank you for the 1999 super chat. Shout out from Southern California. It's nice and warm there still, kind of. Thanks for sharing. Have a good night, everyone. Thank you, Pam. I really appreciate your support. It's totally amazing. I'm not used to it yet still, so you guys are just epic, and you're going to hear about it for a while, so I'm sorry. But no, I think, at least in my thought process, is that, yeah, it's going to hurt. What we're about to see in the economy is going to hurt. And this takes me back to Dr. Burry's tweet about Main Street going to feel the pain the most, of what was it, the loss of like what countries would have, right? It was something about that tweet. And I think a lot of people kind of misread it as, because he talked about the meme stocks coming down and the crypto coming down. And I think he's referring to after MOAS, after all of this, because regular Main Street is going to hurt. People that are not paying attention, people that I want to be able to help, who I'm trying to reach at this point to say, hey, wake the F up, see what's actually happening, because you have your average person is not aware. They're not watching what's happening, and it's all over again. And so Main Street will hurt. They will have massive losses, and that's what kills me. Yeah, Twisted.
Yeah, so it definitely happens after the MOAS, in my opinion, just based on the principle that the MOAS is the catalyst for crashing everything. So the way I look at this thing is, like, I try to look at things from all sides or all perspectives, and not just like look at charts or technicals, but look at what the world does, right? What does the government do? What have they done, right? They essentially walked us into a situation. We like to believe that we went on the Reddit boards and did this, but we're in the age of technology. These bots on these multiple millions of pages or 10,000s of accounts that were not real said we're all buying this simultaneously. We saw that created the narrative, and we jumped in. And ultimately, I look at it as we're intended to be the scapegoats, right? If you're buying AMC or GameStop or any meme stock, right, when it does when the MOAS does come and everything else falls, well, there's going to be a lot of people that didn't listen, that thought we were fucking crazy, that are going to be angry at us because the government needs a scapegoat always, because they need to come in and they need to be the savior, right? But essentially they had to blow the market up. They didn't have a choice, right? They did not have a choice. They've been trying to slap band-aids on it for forever, and this was essentially inevitable. And I used to hear talks about this and get angry and be like, what are you talking about? This shit is not going to happen. That's not going to happen. That's not going to happen. Not knowing at that time that AMC was ultimately the catalyst for this happening, right? Realizing that now, but then I didn't realize that. So it used to make me angry to hear these things, and I used to want to debate it or argue it, but then I start going back and looking at history and looking at what's happened and paying more attention to my government that I know clearly does not give a fuck about me, and seeing them actually pretend to care, right, and distribute this money. But then I also realized that a lot of this money was actually propping up these individual securities while everything else was kind of taking these dips around it. So inevitably, we are the scapegoat in that situation, right? We are the reason. We will be the reason for this reset. I don't think the reset is a bad thing, right? I think it's just intended to reestablish power within the United States, and not just that, but reset an economy that was destined to fall eventually, anyways.
Yeah, there's a lot of stuff going on. Man, a lot of stuff that you just said that I want to touch on. With wages and everything. When wages go down, like all the people that have debt, if we do get deflation, they're going to be trapped for a long time, right? Because if we get lower wages and people still have really high debt, you're going to be working your whole life to pay off that debt, potentially. So that's one thing we need to watch out for. The other thing is that, a lot of people are getting impatient about, their stocks going up, the MOAS, whatever, right? Look, this part is the easiest part. Straight up, this buying and holding is the easiest part in all of this. What comes next is what's going to be tough, right? I think, this is just me, I think the most responsible thing you can do after MOAS is to start businesses, to create jobs, to help people out, because Ken is right. Most people don't know about this. Most people don't know about this, and they're not invested into it. I think maybe the Fed and the money markets are doing something to try to cushion it, right? We see that in some of the mutual funds that got created recently, where they put GME and AMC in there. That might be helping out to protect people who have pensions and retirement accounts. But we don't know. We don't know. So we'll have to figure it out soon. But yeah, the most important thing, I think, is just making sure that jobs get created.
I want to say too, I think that when those jobs start filling, I think the government comes in and buys those companies up. I also feel like it's the same thing, like in terms of like the housing market, or like people being at risk at being homeless in the midst of a pandemic, right? You can step in, essentially be the savior and say, okay, all these FHA loans, we're not going to auction these off. We're going to actually allow tenants to continue to sit in these properties while being the savior, right? You're the savior, but then implicate programs in which keep people working, right? Keep people working for the government, essentially. So I think that's more or less what it is. Because if we look at China and like how they have this fucking app where you have a rating and you move around, and like they're like this communist shit, right? I think the United States essentially wants to be somewhat similar to that without it being recognized, if that makes
sense.
They walking people into this new form of slavery. So I think the biggest thing is like we have to try to educate each other and understand too that we can't be sad about it, right? Because we could try to provide the information, but most people are going to hear shit like this and think we're fucking maniacs or we're crazy, right? But we're only speaking off of what's in front of everybody. Your inability to look and pay attention will ultimately be your demise, right? Because you're still plugged into this system and this one way of thinking, right? This same thing that keeps you working that 9 to 5 and never being able to get ahead. The same thing that makes you be 60 and not have any kind of retirement or any money saved. This way of thinking is what's problematic, and is also what creates the division. So when we're talking about things like this, you don't have to take our word for it. Just kind of like look at what's going on around you. Go back in history and tell me one instance where we saw this situation or these circumstances, and then make your decision on what you do. After that, you don't have to do what I do. You know what I'm saying? But there are inverse ETFs where you can actually make money off of what's coming. You know what I mean? There are ETFs that you can ride back up once things start to be reestablished. So, you don't have to be afraid. If anything, be prepared or be preparing yourself for these situations, or just deny that it's coming and deny that it's going to happen. And maybe we're all fucking idiots and we're all wrong, and maybe you'll be right and you'll just be okay. But just for me, it's enough just that there's a possibility that it's coming to incentivize me to prepare for it. So I think we just, as people like GME, I think us as people, we just can't be overly we can't overly attack ourselves, or overly I'm trying to find the proper words to put this. Like, we can't be sad because some shit is coming. We just gotta do the best we can and try to educate people in the best way we can. If they don't listen, I mean, they just don't listen.
No, you're absolutely correct,
I
Twisty.
agree.
Yeah, and so for reference point 2, I want to point out, like, so in my hypothesis is that there's roughly between AMC, GME, the meme stalkers, whatever you want to call it, I don't care, roughly 15 million people. Roughly 15 million people invested within all of the meme stocks. Okay. Looking up the world population right now, we're sitting right under 7.9 billion people. That is a small fraction. Last time Hambone looked it up, there was 56 million millionaires in the world, right? So 15 million people invested in this out of 7.9 billion is a fraction.
It's a huge number.
It's a
huge
fraction.
number.
And so, yeah, we are the ones that are going to be the
Are
guiding
we really
light.
down to that many people? Has COVID-19, have we lost that many people throughout the it was way more than that.
I'm just looking at the world meter thing. It says 7.8.
I think what Ken is trying to say, though, is that
it the number don't
yeah, no, so it's I don't know. So that's where we're gonna have to be a guiding light, because we spotted the BS. We spotted all of this, and people are gonna be like, "What the fuck do we do now?" Like,
yeah, Twisted. What you said is not wrong. It's just that the problem with having government hire everybody is that the government doesn't produce anything. You know what I mean? I don't know if you've ever worked in government. I have for 3 years, and man, it's not great. I'll just say that.
But
much.
I think that's the whole key, right? Because things are ran a certain way, right? And this program that's been implied or implemented over the past 50 years, 40 years, or 60 years even, it's been effective in terms of keeping poor people poor and rich people getting richer. So I feel like they're ramping this up, right? But in a different way, to where it's more practical and more I can't even say practical, that's a horrible word to use. To where it's more effective in terms of GDP, in terms of growth, in terms of reestablishing a different way, to where we don't ever have to worry about another country rising and surpassing us, if that makes sense.
Yeah. I think there's a lot of worries right now that America's going to get replaced as the world reserve currency and stuff like that.
That's not happening.
Exactly. My question to you, if you think that is, where would you go? Where would people go? America's the place.
I'm not going
exactly.
anywhere. I'm not going anywhere. I know how this ends, right? And I understand. See, I think we all have our individual things that we want to do. Like, we could do shit like buy up a shit ton of land, right? If you're riding the inverse ETFs, when this happens on the housing market, well, then you can take that very same money and you can buy a shit ton of land at the bottom, and then you can build houses on that land, and you can bring people in. You can build communities. It's just a lot of shit that you can do as an individual, in this situation, to see to it that it's not that much more horrible. You know what I'm saying? Because I think anybody being at the top of the podium and looking down at how fucked up shit is, especially living that life or being in that first cycle, you know what I mean? I think it's gonna hurt anybody or fuck with anybody emotionally to see that. You know what I mean? I think that's the bigger thing. But the main thing is just trying to prepare people, right? To trying to incentivize people or explain to people like things that they can do. Like, we could talk about the problem all day, but I think the bigger question is, what the fuck do we do to fix the problem, right? Or to combat individually within our own lives, to combat the situation or what's coming, right? And like I say, man, there's a dozen ways. There's a dozen things you can do. You know, like I said, buying land, buying property, man, investing in the inverse ETFs, rolling those things, rolling those ETFs back up. You know, fucking man, it's just you just have to research it and figure out what works for you best. You know what I mean? And I think people talk about this scary situation, but not often do people actually provide solutions to the up and coming problems.
Yeah, I just want to put a disclaimer in front of that. If you're going to be investing into anything, especially inverse ETFs, the levered ones, make sure you know what you're doing. At the very least,
100%.
get some understanding for how.
Iterate on it a little more, man.
Just, some people, when they hear, inverse ETF, they'll look it up, they'll just buy it. And if the market keeps going up, which, look, I personally think that there's a chance that we actually continue on this crazy bull market. I think there's a very real chance of that. I know everybody's scared about Evergrande, everybody's scared about China. We're, in a bubble, yada, yada, yada. I get all of that, okay? But what have we learned this entire time? It's that the market can stay irrational, right? And if you're betting against the market and you're no longer solvent, you know that all too well, right? If you've been, betting on the VIX spiking and you've been losing money, you know what I'm talking about. If you've been in these inverse ETFs,
You're breaking down some, bro.
Yeah.
We can hear what you were saying. I heard the VIX and
Well, and actually, I'll second you, Conway.
Yeah.
I'm right there with you, actually, because how I see it with it, when it comes to inverses, the MOAS will make the markets go up for a brief moment. A lot of the companies that, that share ETFs with AMC, GME, they are in the S&P 500 and the Dow and the NASDAQ and everything. So yeah, the inverses, that will go down while the markets are going up. No, Conway, 100%, I'm with you on that. The bullish trend will continue, but I think definitely keeping it.
Sorry.
I was just going to say, keeping an eye on the inverses. Twisted, we've talked about inverses and the real estate inverses and what to do and that stuff. Like, we talk about that all the time. You can ask Callister.
oh no, I believe it. I believe it.
So yeah, no.
But I'm saying most start talking about these things, but they don't really say that, right? It's just like, oh, something's bad, it's coming. This is why. But nobody's like after the fact, like, well, this is what you do to combat it, right? And that's just my way. That's why I said figure out what way works best for you. That's just my way, because I don't believe that. Now, I do believe that AMC and GameStop will not be the only stocks that go to the moon. I think that stocks that sit in those ETFs with these individual securities will go with it. But ultimately, like when people start talking about SQQ and stuff for the first time, I'm fairly new to inverse ETFs, but when people start talking about that type of shit, blue chip will fall. It will.
It will.
I believe that 100%. While this is running, we will watch the inverse ETFs fall. We will watch the housing market fall, because I don't really see. If anything, I don't personally see anybody going to take their money out of AMC because it's at $1,000 and going to buy a house. If anything, I see people riding this out until the end, right? Until it finally caps out and people start talking about, hey, I'm selling, right? And I can't. You could see an influx of people buying properties, but I don't know, man. I don't know, bro. Like I don't feel like it's any way to combat the situation. And I think that it's intended, right? When you start talking about infrastructure spending, in a time where shit, bro. Like personally, I feel like the whole infrastructure spending bill is just a ploy, right? So that when resources fall, the government can buy them up and hold them, if that makes sense. And then say, well, we have to hold it because we need it for infrastructure. You know what I mean? I feel like it's just a ploy, right? But and then building homes and then buying homes and then kind of seeing BlackRock. It's like it's right there that it's coming, right? And it's almost designed for the government to seize control over everything.
Yeah, I mean, it could be. I mean, there's a lot there. I mean, the inverses. I mean, one of the things about those guys is that timing is just incredibly important. I mean, and I agree with kind of everything that was said here. Is that the bull market could continue whether it's completely rational or not, and that's one of those things. It's like you almost have to hedge for. It's like I personally have been keeping a good bit of cash on the table because I think we're in for something. But I haven't been buying up the inverses because timing is incredibly important. And I mean, those things rebalance, you know, a lot of that, especially like the triple leverage ones and things like that. Like those things rebalance on a daily basis. And so playing the inverses is, you know, it can be playing with fire. Now, if you time it right, you know, it can pay off incredibly. But I mean, if you look at some of the past market crashes, I mean, it's, you know, timing's super important.
for me, I mean, I've only got 20,000 in like SQQ and like SRS, right? And then I'm just holding that long term. So, you know, that's just a second term. And if the MOAS happens and this doesn't happen, well, then I mean, it won't matter. You know what I'm saying? But at least I did something to protect myself. Like I don't really, I mean, with being in AMC, if I am wrong about the housing market and XYZ, it doesn't matter, right? Because I'll be super fucking rich just off AMC. So even if I lose that $10,000 or $20,000 in whatever inverses, it doesn't matter, right? But it's just all about kind of spreading shit. I think that's why they say diversify your portfolio, right? Don't just think one way, right? Don't like I'm in the process of buying a house, right? We waited from the beginning of the pandemic. We were supposed to buy. We got approved for $380,000. Like I didn't use that. I said, okay, nah, fuck this. I know the market's gonna dip, and I'm watching the market kind of like dip back down in front of me, you know, but I still think it's going to be a little lower, right? So I'm just now kind of like starting the process and going and getting the fucking pre-approval letter and all this other stuff, you know what I mean? And I'm still going to drag this process out a little bit further because I still think we still have some time, right? We still have 3 to 4 months before 2 to 3 months before this shit actually bottoms out or starts bottoming out.
Yeah, man.
It could
All
be.
I'm trying to say is, you know, don't be stubborn. We're in a bull market until we're not. And when we're not in a bull market anymore, we're in a bear market real fast, right? That's what they say. Escalator up, elevator down. We go,
Facts.
we climb a wall of worry, and then we free fall all the way down, right?
Yeah,
and
but
then
I mean,
I'm just saying, for people thinking about getting into triple levered ETFs, definitely make sure you know how to read charts. I mean, last week, Evergrande, right? Everybody thought that the market was going to crash last week. I even did a poll on Twitter, and most people said that we were going to crash. What did we actually do last week? We went up 2%. Monday was bad, right? If you were in SQQ Friday night, Monday morning, you made money. But by Friday, you lost that money.
Yeah, but it's all good though, because like I said, bro, like I'm not being stubborn. Like I said, that's only 20 grand. Like that's a small percentage of my portfolio. So when it's all said and done, I'm gonna let that ride out. I'm gonna let that play out. Like 2 years, a year. Like I do have options on SRS, but those shits are far out. You know what I'm saying? But I have individual shares in these inverse ETFs. So like whatever happens, like essentially what I'm saying is it does not matter. You know what I'm saying? But like it can be like vice versa for you, like $1,000 or $500 or whatever you can afford to kind of like jump in. That's completely up to you or anybody else. Like I'm not trying to pump inverse ETFs, bro. Don't get it twisted. Like, and I'm not stubborn. It's just I'm just saying, like, don't over leverage yourself. I know a lot of meme stock players, like, it's like, oh, only buy AMC, and you start talking about other stocks. I've heard certain chats get upset, or you know, because a certain person, or not even just me, but like somebody else is saying, go buy this, go buy that. I might not necessarily agree with that particular investment, but I mean, I'm sitting back. I'll just give my opinion. I don't think it looks good, but that's up to y'all. That's ultimately what you do.
Yeah, for sure. I mean, we're definitely not like that at all here. I mean, we're 100% like open discussion. Like we talk about the market broadly. I mean, it's not a lot of us hold AMC and GME and are really big fans of it. But I mean, we talk about everything, and we like to have good, good debate, good discussion. So yeah, I mean, the inverse ETFs, like I said, we talk about them a lot. But I mean, they are risky to like the average person for sure, and so it's like
they're designed to go
some
down.
Some of us play with them.
Oh yeah, I mean the decay, the natural downward trajectory of them, like they are very risky. Like
they eat themselves.
If I put a risk factor, right? You have crypto. I don't consider crypto very risky. And then we have stocks.
Some people would say otherwise.
It depends on what stage you're trying to get into crypto. Look, True. Twisted, when I said you, I didn't mean you. I just mean people listening, right?
Yeah, in general.
Okay.
Definitely get familiar with inverse ETFs. If you're feeling risky, if you have that risk appetite, definitely get.
Like that's where I gotta have the problem, because you're like saying feeling risky, right? Like these things have
Yeah.
been going down forever. Eventually, what goes down must go up, bro. Like it's got to go back up. Like that's just the way the market moves. At a certain
We'll,
point, these things have been going down since 2008. You know what I'm saying? Like
Yeah,
I
but
get
with
it.
these things, timing is important.
well, and I
And
will.
like I said,
If I'm
you know,
buying, but if I'm buying SQQQ right now, right at the bottom or whatever the case is, so not even just SQQQ, but like if I'm buying SRS at the bottom, right, this is the lowest. Well, I bought at 12, but it was at the lowest that it's ever been at, and it's kind of been moving in an upward trajectory since I've brought it, right. There's really no risk there. It's no different from me buying a security. You know what I mean? Like I say, that's a smaller percentage of my portfolio.
Zero.
I think we have different risk appetites, so we're gonna have to agree to disagree.
Well, and
I mean, it's cheesy, but it's true.
I will add
Yeah.
before Zach starts in Twisted, I will add that UVXY and a lot of inverses notoriously do a reverse split. UVXY just did one a few months ago where it touched I think $3 and they did a reverse split. It was like 20 or 10 to 1 or something like that. So basically 10 shares got put into one and it popped back up to like it showed $30, but it was actually was it 40? I can't
think so.
Yeah, so it was an astronomical. So essentially if you were in it, like all of your shares kind of got merged in and you ended up losing even more money. Like
I see what y'all are saying now.
Yeah, so that is something to kind of keep in mind. You have like state of decay and different things with inverses. Like they're like that's why I was saying like you have, in my opinion, you have crypto and then you have stocks and then you have options and then you have forex and then you have inverses. That's my my risk assessment. Like inverses.
I get it.
So I mean, it's something definitely to look into too.
Yeah.
Oh, where did
I know.
he
I don't think he left.
Oh.
Oh no, Zach. You got he came back, and I think he might be having an issue. Yeah, no, but I know that SQQ hasn't done any reverse splits like kind of since they ran up or like since they started. They've just been kind of like shuttling down, and that's just been what it is. But like I get what you guys are saying. But like that's just my way because I'm not just there. You got to remember. So I have a large portfolio in crypto. I have a large portfolio in AMC. I even have Sundial at this point, even though everybody else probably sold theirs. You know what I'm saying? But like I have everything kind of like spread out, and then I'm kind of moving towards property. So like I'm diversifying. So all I'm saying is like whatever works for you. I'm not saying do what I do, but just like whatever works for you in terms of that. And I thought we were on the same page in terms of like where the world is going, right, or where the economy is going, and X, Y, and Z. I thought
we're on the same page about where the world is going. We're not on the same page on the timing. I don't know what's going to happen. You seem very sure, and I just, like I don't know when this thing is gonna pop off. I just know that it will pop off. That's
okay. I get it. I get what you're saying.
Yeah, I mean, I don't. I mean, again, I'm not a financial advisor by any stretch, and this is not financial advice. But I mean, for me, like, I would even if you're looking at it as a hedge against your portfolio, then I might buy a couple of puts towards some of the stuff that you're holding, as opposed to like holding an inverse potentially. But I don't, just something to think about.
Yeah, no, yeah, I know. I just do it that way because like I don't really have time for that shit. You know what I mean? Because I'm still swing trading and shit like that. So like I just fuck it, inverse. Like I say, for me, whenever I invest in something, I'm expecting to lose it. Right? It is what it is. You know what I'm saying? In this situation, and I get what you guys are saying in terms of like how sure I sound in terms of the time frame. That could be a little misleading for other people. So I see where you guys are coming from now. Sorry about that, man. I kind of misunderstood.
Well, no, it's all good. Like I said, open discussion. Like we like it.
100%.
But
Always.
yeah, Zach, what's up?
Is Zach up here?
No, I don't see him.
No,
He was up here. All right, guys. We are gonna wrap up tonight. I love the discussion, and we might have an open mic tomorrow for sure. So Lou, Twisted, Hallister, Conway, JB, any of you guys that have been up here, anyone that's been in tonight, if you guys want to join again, open mic, we can talk about whatever. If you guys want to dive into how inverses work, we can do that. If you want to dive into some cryptos, which I know some people are very treading lightly on cryptos because, well, it's Sunday. They dumped. They did exactly what cryptos do on a Sunday. They dumped. But I.
AKR. Real quick, I just wanted to say thanks for letting me up too, man. I was following you on my other profile, but apparently I wasn't on this one. But I made sure I followed you as soon as I came in too, man. I know you're probably like, why is he not following me?
No, you're fine. I don't question. I don't question at all anymore. But no, I appreciate that, and I appreciate you coming up here. You definitely had a lot of great things to add into the conversation tonight. I mean, I love hearing all of the different perspectives and how people are viewing things, because I mean that's how we get to the truth. Like I always say, multiple perspectives. Somewhere we will find it, and we need to all work together to kind of get to that bottom and what's going on and how we get there, right? Like we all are going to have to help each other. We're going to have to help the rest of the world after this. Those 7.5 million or billion people, we're going to have to help them. So hopefully we can gain as much information as possible. But until tomorrow, guys, I'll see ya.
Right on. Thanks, Kenna, Connor, Twisted, everybody who was up here. I'll see you guys at Market Open. Or possibly more spaces tonight. I don't know. See you, Kenna.